Now, oil prices jumped on Tuesday, with Brent currently at $102 per barrel as the US looks to its allies to help secure the Strait of Hormuz. Prices eased slightly on Monday after reports that several ships have navigated safely through the Strait of Hormuz. Ship movements through that vital shipping route have virtually stopped since the war, fueling one of the largest disruptions to global oil supply in modern history. Well, for more on all of this, I'm joined now by Jameel Ahmad, Chief Analyst at GTC. Jameel, we're seeing Brent crude still at $102 per barrel. How much of an impact really is the IEA's reserve having?
I would say if you're looking at the price increase, you got an asset now that's up 50% this month. That actually, the IEA move hasn't moved the market enough. And actually, we're seeing as maybe a bit of too much of a exaggeration in terms of the initial reaction, because it seemed to be based on initially the historic price moves we saw in oil last Monday, rather than actually the supply disruption. Because right now you have an asset and a market that's very much sentiment driven by headlines. But what we haven't seen yet is whether there really has been a supply disruption and what the impact might be on economic output of the commodity. And that's where the IEA can move in. Should we have a production issue, or should we really have a supply issue? But at the moment, we're looking at a 2-week potential regional crisis. But if this persists longer than a month, then I think the IEA and its partners will need to step in more into the markets.
Talking about production issue, I mean, Trump has touted at destroying the oil infrastructure on Kharg Island. Would that be ringing alarm bells then?
It would be seen as an escalation, but at the same time, when you consider the US president's also saying that oil prices will, to quote, drop like a rock when this is finished. This suggests it's a possibility, but not a probability. I think what you really need to look out for here is whether the issues in the region where Iran is attacking certain regional partners and those real producers of the commodity, if that then impacts what production the region can produce, then that would be what would impact price over the future, rather than these speculative headlines, which could shoot in either direction. Should we have some sort of a ease in tensions, then the oil price can suddenly dip lower as well.
So if we don't see the war ending anytime soon, which it doesn't seem like there is an off-ramp, what do you think about oil prices reaching? Iran's touted it could reach $200 a barrel.
I think everything at this point is speculative. If it ends within a week or so, then this could end very quickly. Should we have further escalations? And of course, we could see more historic levels in oil outputs. I would also look at what impact this is going to have on the global economy and the central bank picture as well, because we shouldn't forget that we had a number of central bank meetings this week where we were looking at some timeframes for potential interest rate cuts. But for as long as we have this inflation outlook that's been pretty much thrown out the window, because we do have inflation risks coming to the market now, central banks will not be cutting interest rates, and that's going to be a problem should we have a global economy that weakens further over the course of 2026.
Absolutely. A few things to look ahead to towards that Fed rate decision. Jameel Ahmad, really great to get your analysis, Chief Analyst at GTC.